Singapore is looking at ways to expand its wealth tax system, but it will only do so in ways that allows it to still remain competitive. Now, for more, we're joined by Associate Professor Simon Poh from the Department of Accounting at NUS Business School. Well, Prof, a wealth tax has been discussed in the public sphere for a while now. So what do you make of the Finance Minister's latest comments?
Well, certainly the reality is that the public has been discussing this hot topic not just recently, but each time the budget is around the corner during the consultation process, they will certainly discuss this very actively. And going by what the minister has spoken this morning, we certainly see that he's looking at it on a more urgent basis, possibly revamping the wealth tax system, possibly even looking at new ways of taxing wealth compared to the traditional ways of taxing wealth, which has always been through imposing property tax and stamp duty, and as well as collecting additional registration fee for cars. So possibly that could be on the cards in the next budget.
Yeah, and Prof, well, if you were part of the team studying the wealth tax issue, what are some ideas that you could think could work?
Well, if you look at the experience from other countries, wealth tax in its purest form means you tax a person's net wealth. In other words, you look at his total assets, deduct all the liabilities. But experience from other countries like Switzerland is that it's going to be quite tedious to work out the actual wealth. It means a lot of means testing, and that could be very cumbersome, and that could be one of the factors to consider before the government decides whether to implement this kind of wealth tax. But on the other hand, Singapore has been taxing wealth all along, right? I mentioned before, property tax and stamp duty. So that's I would describe it as a low-hanging fruit. So if you want to make it more progressive, we could possibly introduce a higher tax rate for the particular tax type, such as stamp duty. So, for example, stamp duty, we introduce a 4% rate for residential properties in excess of 1 million. We could possibly look at a higher rate for a higher price property. For example, a good class bungalow in the tune of 10 million, for example. And likewise for property tax, currently we impose a graduated tax rate up to 20% for residential properties. Again, if we really want to make it more inclusive, a possible raising of the higher tax rates for the higher price properties could well be on the cards.
Yeah,
and of course, I just add. Currently our GST there's only one rate, which is 7%. Possibly we could introduce a higher tax rate, say 10% for luxury goods, such as again. Good class bungalows, for example, to the tune of above 10 million, for example. I'm just giving an example here.
And, how fine a balance is it ensuring inequality doesn't run away versus the need to stay competitive?
Well, these are very conflicting objectives. In fact, if we want to be really very competitive, we should tax very lightly. Even the rich, we should be taxing very lightly, and that is what has happened in the past, which is why our individual tax system has always been very competitive by international standards. So if we really want a more progressive tax system, of course, that runs contrary to we could, in the worst case scenario, lead some wealthy individuals to relocate. But having said that, if someone is really filthy rich, what I mean is ultra rich, just because they are paying a bit more taxes, I don't think that's going to make them relocate, because they are going to look at what Singapore has to offer in the whole ecosystem. We have a good education system. We have rule of law. We have strategic location. Our location is free of natural disasters like typhoons, earthquakes. I think the list goes on and on. We have political stability. We manage the COVID situation very well by international standards. I think the list can go on. So possibly introduce a higher tax rate, but only for the ultra rich. We don't want to burden the sandwich class of people. So, for example, if we want to make our individual tax more progressive, we propose that we do not raise the income bands across the board, but only at the highest end. So currently our highest tax rate is 2% if it is above 320,000. As an example, maybe 3 million leads to a higher tax rate.
Thank you so much, Associate Professor Simon Poh there from the NUS Business School.